My dear student, today I am going to discuss a new topic. Its name is commercial bank. So it is not in the CBSE syllabus, only in the CBSE syllabus, that is how the commercial bank creates credit. But its function is not in the syllabus of CBSE. But being the student of commerce, we must know what is the function of commercial bank, because it is an important unit. The whole economy depends on the commercial bank. So it is the backbone of any economy, because the transaction of money takes place with the help of commercial bank. So first of all, we should know the definition of commercial bank. Commercial bank is a financial institution. Its main function is accepting the deposits, granting the loans, and making the investment in the absence of the customers. So there are three main, according to the definition, there are three main functions. First, accepting the deposits. Second, advancing the loans. And third, that is the investment purpose. So the whole function is divided into two parts. One is known as primary function, other is known as secondary function. So here the term is used primary. Primary means most important function, and secondary means it is also important, but in respect of primary, the function of the secondary is less important, but secondary function is also done by the commercial bank. So first of all, primary function is divided into two parts. First, accepting the deposits, and second, advancing the loans, as I told in the definition. So accepting the deposits, there are a number of customers who has their own account in the commercial bank. So for commercial bank means what? The SBI, ICCI, IDBI. So any bank where a customer has its own relationship with that is the known as commercial bank, and every customers, according to their own needs, they deposits their money. Some are the businessmen, some are the service people, some are the self-employed people. So in this way, according to their own requirements, they open their accounts in the hand of commercial bank, and they deposits their money. So first, that is the current account. Current account is basically opened by the businessman. This facilities has been given only to the businessman. In this accounts, a person can withdraw the money more than 2, 3, 4 times in a day with the help of checks, and this facility has been given. Second thing is that on that account, the bank does not gives any kind of interest, because the banks here provides security of money. Third, that is the most important, in case of current account, here sometimes the bank charges his service charge in place of interest. Second is the time deposit. This is the most important. Time deposit is also known as fixed deposits. In case of fixed deposit, a customer keeps his amount for a specific period of time. Here the rate of interest is very high, and the people earn more money with the help of interest, and that's why it is known as time deposits or fixed deposit. Within the given period of time, nobody can withdraw that money before the maturity. If any person has the requirement of the money and they want to withdraw their money from the time deposits, they will not get the fixed interest rate. They will get the general interest rate. Now Next is the saving deposits. So saving deposits is also a kind of current account, but it is something different. Here the rate of interest is provided by the banks, but here also there is there are some rules. Nobody can withdraw more than 2 times in a day. They can deposit their money more than 2 times but can't withdraw that money, and it is also withdrawn with the help of checks. So that check is provided by the bank, and even they can also use that money whenever it has the required. So current account is also known as the demand deposits. Demand deposits means what? Whatever the amount is deposited, the customer is demanding. Like that, the saving deposits also it takes place. Okay? So in this way, it is the primary function related to deposits. Now come to the loans, advancing of loans. So in the society, there are 2 groups of people. One has the surplus money and one group face the crisis of money. So the person who face the crisis of money to fulfill their own requirements, they wants to take loans from the bank, and the bank is ready to provide them loans, and that is known as advancing of loans. So loans, there are 3 categories, or you can say the loans is divided into 3 parts. First is the cash credit. So cash credit means it refers a situation in which the customers demand cash on the basis of their current assets such as shares, bonds and so on. And here the bank provide them cash, but it doesn't given in the hand of the customer. The amount is credited in the account of the customers, and according to the facilities or the amount of withdrawing power, the customer can withdraw the money. So here cash credit is related to cash assets such as shares, bonds, etc. Second is the demand loans. So demand loans refers a situation in which at a time the bank can demand the whole amount at the same period of time. So it is also provided by the banks, and directly it is given to the hand of customers. Okay. Next is the short-term loans. So short-term loans, one thing that is also important here, in case of demand loans, the interest will be charged at whole amount. This is the basic thing in case of demand loans. So here the at a time the loans is demanded and the customer will have to deposit, and here the interest will be charged at the whole amount. And short-term loans, here the customers provide some collaterals, and on the behalf of the collaterals the bank provides loans to fulfill their requirements. And basically short-term loans is taken by the farmers, by the small businessmen, and they deposits their collateral. Here the rate of interest is slightly lower than the rate of demand loans and cash credits. Okay.